Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, June 24th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, pre-market trading here. Futures are a little lower here, down 0.7% right now for the ES. One thing that happened in the previous session here was the market wasn't able to hold on to those late day gains. It gave it back, forming a doji day. One thing that was very apparent early in the session was that price didn't want to get beyond 3150. 3150 is a very important key level there. You can see how price, after taking it offered here a couple of Thursdays ago, you see bears have come in to defend that 3150 here ever since. Now this could provide upside buy stops there to fuel this move higher at some point, but at some point as well, if we can't get above 3150, we may need to auction lower to shake out and then see maybe perhaps another bounce off the key range low. So right now we're still building energy in here. We weren't able to fully materialize on those on that late day strength there. Instead it fell apart, and right now inside day, back inside the range. We have a very narrow multiple day range here of about 8 days. If we come down here, you can see on the 5-day range we're already compressed at 53% of average. If I increase this to 8, we should, is that 8 or 7? Let's go 7. Right here. So if we bring it down to 7 here, what you'll see is that price is still compressed on a 7-day range basis. So 1, 2, 3, 4, 5, 6, 7 days here. And that's where you're seeing a compression. We're at 48% of normal there, and again, that's building energy. And so whenever we see that type of major compression, what's about to happen is we're about to see a significant increase of volatility soon, and we're likely going to go up toward this upper red dot. Again, 322.5 points of range could be ahead. Now whenever we do break out here, this red dot may come down a bit to provide resistance at a later point, and that could be as low as 300, so perhaps, or even 290. So again, doesn't have to be exactly 322 right now. It gives us a starting point, but call it 300 points of expansion that could be seen whenever we get out of this narrow 7-day range. So right now that is significant, and it could go in either direction. Obviously the overall trend remains to the upside, but again, either direction right now as this thing continues to compress. All right, let's take a look here at the NQ. You'll see with the NQ, this one reached all-time new highs yesterday. We talked about the breakout and how bullish it looked. Ascending wedge, very bullish rejection overnight, and a continuation. In the trading room, we were able to get a very good move out of this one, over 100 points off of the pullback lows here. But now, after falling late in the day here, we were not able to hold on to those late day gains, which were very, very important. We were able to stay above the 10-150 level. 10-155 half, very, very important. But what we're seeing right now is, again, key range action here off those key range levels. So we have that impulse sell-off, and right now we are forming an inside day right at the upper boundary of that range. Again, 10-155 half, very, very important. And if this is a bull trap up here above this high, which can tend to happen, then we have a very high probability first round target at 97.61. That's the midpoint of the impulse range. And then there's also the potential to come back down here and test the 93.68, the bottom of the range. A trap below the bottom here, call it 92 to 93 or 92 to 94, could be a great trap for a return back to those highs. So again, that's a potential blueprint that can play out down the road if we fail at these highs. All right, let's take a look now at crude oil. All right, here's a look at crude oil. One thing you'll notice here is that the previous session, price rejected 2-day highs. That was very, very important, and this was a very major cue that the market may pull back in the ES and the NQ, because as those were going higher, the crude oil chart just wouldn't go. After it failed to hold the 2-day highs, previous high here 40.60, the high over here 40.77. Once it failed to hold those 40.60s, price for the most part gave out closed back to 40. Now we're seeing basically a midpoint retest back already at 40.5, just shy of yesterday's midpoint, and now back to lows. That is very bearish right there, at least on a near-term basis. Obviously, the rising 8-period average has been very, very bullish, but one thing that we've continued to watch is this upper level right here, that upper level, 40.5, and you can see right now that it has been rejected here, at least in a near-term basis, being rejected here right there. That's right where those highs were, rejected yesterday, came back to it here today with a high of 40.5, 40.54. Now we're below this previous low. So again, if this thing continues to stay below 40, 40 could be a retest entry that leads to more weakness, again back toward perhaps as low as 34 bucks here. So 34 could be ahead for this one if we have rejected these highs. So basically the high and low that we're looking at is this recent high here. That's the 40.5 level. The low here is 34.27. If we're going to reject this high right now, then we likely can rotate as deep as this low here and still be a buying opportunity down the road. But right now, short term, keep an eye on 40. All right, let's take a look here at gold futures. You'll see with gold futures, this one was actually able to push beyond the 1775s by the end of the day on a closing basis, the first time to close here back above the 1775s, and now nearly close to the 1800s, getting as high as 1796.10 today. I mentioned before that we would likely rotate back down off of these highs if again with this range right here, that last session here was the important session to reject, and instead it closed above. Again, there could be some late bulls here that get trapped, and that could rotate back down. But now price again is still watching that 1775 level because a failure there opens up a rotation back down. And if we continue to hold above that zone, then perhaps this is starting an upward price trajectory here. One thing to keep in mind is we've been talking about this upper consolidation here, this big range. And this move here, the break, now seeing what we're seeing here, looks like it was the real deal here. We have a very clear compression that had developed at the middle of that 3-month range, and this was a pretty significant day, and now we're closing through 1775. That's two major breakouts and continuations here. This may be an opportunity now to take this thing to 1831 or perhaps as high as 1957. So any pullback here, again, you have a rising PIMA trigger zone right here. If this thing pulls back to 1760, that might provide a slingshot move to 1831 and 1957. Again, those two targets are derived by this large key range here that we've talked about before. This large impulse move, we've been consolidating at the highs, and if we break to the upside, 1831 is the 50% target, and 1957.70 is the 100%. So again, a couple of things to keep in mind here with GC as it appears that it is finally making that expansive move. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I will see you in the trading room. Take care.